everybody. I am, well, first of all, I'm exhausted since I've been up since 3:45 in the morning. I took an Ativan an hour ago, so that's weighing on me. Um, and yeah, I'm pretty depressed. But I'm a big boy, and I thought it was important that I come out here and do this. Um, so I'm doing it. Why don't I just say up front that I have not traded Target Hospitality today. There's been no buys, no sells. I did try to put on some spreads about half an hour ago, and I got nothing filled. I have absolutely no idea what the right price is for the spreads I was looking to buy, because there's just so much uncertainty about what happens here going forward. So there's really a lot to analyze here. I don't even know exactly where to start. Something's not right here. I just don't know what it is yet. So let's just start with the obvious. And why don't we just pierce through each line of the press release, line by line. And I'll tell you what my issues are. So it says that starts off talking about that they got the 1080 bid in March. Then it says that they launched a formal process to solicit offers for the company, and they invited Arrow to participate in such a process. Okay, we would have expected that. Following and this is where every line is just very important to go over. Following the previously announced loss of a contract, no formal offers were received, and Arrow did not reaffirm the TDR offer or advance any alternative proposal that the special committee could conclude in consultation with its independent financial and legal advisors would be more attractive to the holders of the unaffiliated shares than the company's standalone prospects. The company cannot predict what Arrow, TDR, or others will do in the future regarding a potential acquisition of the company. Okay, there's a lot in that paragraph. Okay, so first of all, why on earth, if post middle of June, when they lost the Dilly contract, why would they have put in the late June press release and then also in the August press release that they were currently still evaluating the TDR proposal and specifically mention the 1080 as the proposal? Okay. Clearly, they were talking with TDR, and if TDR had never reiterated, never, quote, reaffirmed the offer post Dilly, what have they been doing since mid-June? Okay, it's now mid-September, late September, okay? Second of all, why did they change the language in the August press release to add other proposals and strategic alternatives if there is no other third party interested and TDR did not reaffirm the 1080? Finally, they didn't say that TDR did not offer any alternative proposal. They said that there was no alternative proposal that the special committee could conclude would be more attractive to holders of the unaffiliated shares than remaining a standalone company. Okay. Also, back in March of 2021, when they pulled, or the process died then, TDR 13D'd the pulling of their bid, the formal process of pulling their $1.50 bid that morning in conjunction with the company reporting earnings and killing the process. In March, on March 25th, they 13D'd the same day that the company PR'd that they bid 1080. They did not 13D this morning. There will be a 13D that comes. What will the 13D say? Will it simply state that they've pulled their 1080 bid and may potentially do something in the future? That's what the one said in March of 2021. Are they waiting to see what the stock does today and put out a new bid at $9? And, maybe that's what the problem here was between the special committee and TDR. Was there a third party that did bid, but did not bid high enough for TDR to sell? Now, I've been saying all along that I thought this is more likely to be they're more likely to be a seller than a buyer. They've owned the company for 11 years. There is no exit taking out the minority. They still would have to sell it to a third party in the future. And it seemed to me that this was a way to get the process going to sell to a third party, but they control the board in essence. They only have one board seat. If they wanted to do a process and do it privately, they could have just ran a process and never alerted the stock market to it. They didn't have to do a stalking horse bid of 1080 to do that. Then you have the fact that they bought back a bunch of stock in January and February of this year for the first time in years, right before they did the bid. So the management team and the board and TDR clearly thought the stock was attractive in the nines when they were buying back stock in January and February. Of course, that was before the Dilley loss. Okay. Now we also have the pending renewal of Pecos in November, which I think is all but sure to happen, but who knows, right? That's still 6 weeks away. And you have this third government bid that should hopefully be awarded by the end of the year. And then finally, you also have Dilley that can be repurposed. The company's currently doing 165 million of EBITDA. They have no debt, and there's 100 million shares outstanding. So at 770, it's whatever, 5 times EBITDA, something like that. 5 times 165. No, it's a little less than 5 times EBITDA. 825 would be 5 times EBITDA. If they repurpose Dilley and they get the third government contract, that 165 million of EBITDA could double. Really, it could be 325 million of EBITDA. Okay. I still believe strongly that the exit plan here is for the company to be sold, because TDR has no other way to exit their position of 11 years. Now, of course, who knows what it's going to be sold for, and who knows what it's worth, right? There's 1-year annual renewals with Pecos. I don't know what kind of multiple you can put on that. Right? That was always my risk here, was that this is a low quality business and they need more diversification so that if they lose a contract, they still have a very strong business behind it. I don't know what they were doing from the middle of June to the middle of September. Okay, that press release to me signals there's hostility between the majority owner and the special committee. I did not read that as TDR worked really hard to get a proposal through and the special committee, didn't like it. Okay. I think it's very likely that there were bids, both from third parties and from TDR. Now, mind you, when they say formal proposal, even TDR's 1080 was not a formal proposal. So when I say bids, I mean indications of interest. And they were lower than 1080, I believe, both a third party and TDR. So you can't be sure. Clearly, if they didn't reaffirm the 1080, then TDR wasn't willing to pay more than 1080. But we have no idea what the company would have wanted, right? Given that we don't have the full picture of these other contracts and of Dilley being repurposed. We don't know if the company would even be sold for 1080, if they would have been okay with that, right? But if they wanted to show strength, they could have just said, we rejected the 1080. But they didn't really show strength. They said that following the loss of Dilley, the 1080 was never reaffirmed. So if you're TDR and you're stuck with the 65% position, and you know that you need to sell the company in the next year or two to get out of it, well, how do you maximize your value today? You tank the stock and you buy back as much stock as you can in the open market. And it's my guess is that's what they're going to be doing. Now, there's also a third possibility that this is a shit business, that they aren't going to get the third government contract. They're worried about PECOS in November. And not only could they not sell the company to a third party, but TDR wasn't going to take this over either. And they're definitely not going to buy back stock between now and then, because why overpay for stock if you think it's not even worth $7.70? Do I think that's likely? I don't. But I also have a very hard time trusting or believing anything that was said in any of these press releases, because they really should have killed this process in June. They should have said at the end of June that TDR has paused their 1080 bid. Yet they didn't. Now they're telling us since mid-June, they never reaffirmed that bid. So were they just trying to smoke out other bidders? And how long does that take? I mean, it doesn't take that long. It takes a few weeks at most to get indications of interest from financial buyers after they've already done the due diligence in May through June. So I don't know what games they're playing. It's very hard to tell you what it's worth, because if they get the third contract, the stock goes, above $12 alone, right? You're looking at 300 million of EBITDA. At $12, it's 4 times EBITDA. I mean, right? And it generates huge amounts of cash. Meanwhile, they have these notes due. They have notes due in June 2025 that they could pay off right now with the cash on the balance sheet. The notes are 10.5% notes, and they haven't called the notes yet. They could have called the notes as recently as last Monday at 1:02, and they haven't called them. I'm sure they're going to do something with them soon, but what's the game plan there? I guess that leaves me with the other two options that they could do, which I think are unlikely. They can lever up and pay a dividend. That's a way for TDR to take capital out of the business. It's another way of monetizing it. They could also just do a tender with or without TDR participating. Again, they could do that very easily for $100 million, $150 million. Mind you, there's no debt on the company. If they borrowed $150 million, they wouldn't even be levered up 1 times. They could take out with $150 million, I shit you not, over 50% of the float. There's only 35 million shares. And the float right now is like, I don't know, $200 million or something. The float right now is like $200 million. Yeah. So there's a lot of different ways that they could arrange the tender, right? TDR could participate, TDR could not participate, but the company is in possession of much more material information than we have. So they can't go into a tender offer trying to squeeze out the minority if they know that they have, let's say, a third party that wanted to pay 10 or 10.50 and TDR didn't want to accept it, right? As someone said recently on Twitter, it'll obviously be very telling if they buy back stock. It's interesting the day they did this, September 25th, and they can't buy back stock today, I don't think, especially if TDR doesn't actually file their 13D yet. Let's see here. September 2024. Today's Wednesday, the 25th. They likely could buy back stock on the 30th. Again, depending on what material information they're sitting on and this and that or whatever. We won't really see any impact of that buyback when they report earnings in November. You will see the updated share count as of the 10Q when they report earnings in November. So you'll know if they bought back stock in the month of October. But it's really hard to read into that as well. Because again, if they're restricted for whatever reason, whether it's the management, the third government contract, or whatever happens behind the scenes with TDR after this press release, they won't be buying back stock. It doesn't mean that they don't think the stock's cheap. It just means they can't buy it. So I think I covered pretty much everything. I'm going to go look at your questions now. My guess is that TDR got cold feet, that they think they could still list at a lower price. The company is pretty open. You could probably call them and ask. I'm speaking with them this afternoon. Yeah, I mean, there's only so much that the company will be able to tell you, you know. That's great that they're doing phone calls. They're definitely not going to tell you the price that TDR was willing to pay. And if TDR got cold feet, it's for what? 35% of the company? They already own 65% of the company. So, you know, they're already pregnant, as I like to say. So cold feet about what? Do we all agree there's a price TDR will buy the 35% out that they don't own it at? Is it $4, $6, $9, $10, $12? Probably not $12 at this point. So I don't, you know, cold feet, it just depends on what they want to pay for it. Maybe TDR are waiting for the November renewal. It's possible. You know, it's just a one-year renewal. So I don't know how much you could bank on that one-year renewal for a long-term kind of perpetuity, let alone annuity. Two things. Didn't they do a $100 million authorization a while back and they didn't act on it? No, that's not true, Fat Eddie. They did the $100 million authorization, didn't act on it, and then they bought back like $23 million worth of stock in January and February of this year, right before TDR launched a bid in March. So they bought back stock from unsuspected people and then bid 1080. And then they went restricted and did not buy back any more stock. How much rev EBITDA does PECO's PCC contribute to this year EBITDA? A lot. My guess is it's 100 million of the 165 million, if not more. It could even be 110 or 115 million of the 165 million. It's a huge part of the company. And did the CFO sell some stock right before some negative announcement a couple of years ago? Sorry, I don't have the dates. And that CFO may be gone now, just a weird manager. The CFO is gone, and I don't know the answer. I will say that the management team did sell stock in April. All three of the management players, it was phantom stock. It wasn't real stock. It was phantom stock. And they sold it when the 2 years vested. And the board paid them in cash, not stock. They had the option to give them stock or cash when they wanted to sell it. And the board chose to give them cash. And it was over 1080. It was, 1110 or 11 or whatever it was. So at that point, the board still thought the stock was worth more than $11, or else you would have given the management team stock, not cash, to settle those phantom units. TDR knows something we don't know and know the asset better than anyone else. So either PICO isn't certain going away, and or something else has made them very uncertain about the biz. That's the negative way to look at it. The positive way to look at it is the special committee also knows things that we don't know. And I'll remind you, back in 2021, they also did not follow through with their bid. Why was that? Because the stock was going to surge as they got new contracts. They could have raised their bid then, and instead it just died. So it's not impossible to think that there's good news on the horizon as opposed to bad news. The reason why that's harder to imagine is, wouldn't they have reaffirmed the 1080 bid instead of just lowering it? Because it's very likely that they lowered it. I doubt there's something the special committee knows TDR doesn't know. I agree with that, but you're assuming that TDR has gotten cold feet and wanted to walk, not that the special committee has asked for more money because they know something. That's what I'm saying. We don't know which of those two things it is. We almost know for certain that TDR did bid something for this business. They did not get cold feet. That sentence kind of solidifies it. The sentence says, Arrow did not reaffirm the TDR offer or advance any alternative proposal that the committee could conclude in consultation with its financial advisors and legal advisors would be more attractive to holders than the company's standalone prospects. You don't have to put that if there's not another proposal by TDR and Arrow. You would just say, Arrow did not reaffirm TDR offer or advance any alternative proposal, period. And then say the company cannot predict what Arrow, TDR, or others do in the future. They did not say that. They said that whatever they proposed was not superior, which means that they did want to buy the company. We just have no idea what price they wanted to buy the company at. I think you have rose-tinted glasses on this. I think this release is a high probability negative. Well, no shit, motherfucker. It's a terrible outcome. I didn't tell you that this was the blue sky outcome. What I'm saying is that there's language in this press release that goes contra to what you're saying. And it's also ridiculous to think that TDR does not want to own this at any price. Is it $1? Is it $5? Is it $8? Is it $12? I'm not telling you I know the answer, but I'm telling you that that release is worded in a specific way that wasn't that they walked. It was that they put out an alternative proposal and the special committee said no. Okay. I definitely don't have rose-tinted glasses on. I am very well aware of what happened here. I'm not telling you the stock's going to go back up. The language in the press release is irrelevant. The fact is that TDR's behavior is more important than the language. The behavior of what? That they did not follow through with buying it at $12? It takes two parties to agree to a transaction, the special committee and TDR. We haven't even gotten TDR's 13D yet. So, again, you're entitled to your opinion. You should short the stock then if you think that it's not worth $7.70. I don't know what you're saying. I legit don't know what you're saying. Do you not think there's a price that TDR would buy this at? Do you factually not think there's a price? Is it $1? Is it $5? Is it $8? Right? You're saying you think bad news is looming. They're worried about PICOs, and that's why they walked. It's definitely possible. Yeah. I don't think that's likely. If PICOs was even close to being lost, don't you think management might have suspended their guidance? Because part of that EBITDA is in 2020, in 2024, right? From middle of November on. Sorry, let me read the rest of this stuff. Okay, but the company had an active authorization for a while without acting on it, right? I'll shut up now. Yes, they did. They didn't buy back any stock in 2023. And I guess they could have, though that would have been pretty stupid, right? Because the stock was $16 a year ago. So they're pretty good at deciding when to buy back stock and not buy back stock. If they lose the PCC contract, how likely is they can repurpose that facility? I mean, they'd have to get the third contract. I don't think they're going to get a third contract if they lose the PCC contract, right? So I have no idea what that contract's worth. The stock is worth like $3 or $4 a share if they lose PCC, is my guess. $300 to $400 million market cap that's doing like 50 million of EBITDA. That's higher quality EBITDA because it's diversified across all of their oil and gas customers. And then they have all these other properties and PP&E that they could try to repurpose for government contracts. But it's an unmitigated disaster if they lose Pecos. The phantom stock versus cash choice was at the election of management. How did they know in April? No, it's not. It's at the election of who's ever on the board and the compensation committee. Let me be clear. The management team wanted to sell their phantom stock, but it can be paid in cash or it can be paid in stock that the management team then sells in the open market. And the board chose to give them cash, non-dilutive, versus if they give them the stock, it's dilutive. It gets sold in the open market. If the special committee knew they were getting a higher bid, why would they put this press release out? They would just wait to evaluate other offers and make an announcement. When I say a higher bid, I mean like 9. I don't mean 11 or 12. Okay. I mean that they wanted to pay less than 1080 and it was not high enough for the special committee to accept. And that seems pretty obvious to the language. Dan, can we talk about something else? I'm depressed. I know, Dan. I'm sure you're nursing your wounds on the 3% position, buddy. I hear you. You'll be all right. So what happens here going forward? So first, we're going to get the 13D from TDR. Do I expect there to be fireworks in the 13D? I don't. It might just say that they pulled the 1080 bid and that they're open to things in the future, which is what they said in 2021. But could there be fireworks in there? Could they say that they disagree with the special committee and that they give us more background? Maybe they say that they put an offer in at 9, or maybe they offer 9 or 950 today. They wanted to see how it traded first. I have no idea what happens here. The only thing I'm certain of is that they have a 65% position and they need to sell it. But they're not going to do it through secondaries. So we wait to see what their 13D says. We wait for November. Assuming that doesn't say anything of importance, then this is all dead for now. We wait to see if Pecos is renewed in November, and it almost certainly will be. They were just granted the contract a year ago, right? This is not the same thing as Dilly. That was a 12-year-old contract or whatever it was. And then we wait to find out if they get the third government contract. And any of those things can send the stock massively higher. Your downside is they lose Pecos. It goes to 3 or 4. And your upside is they keep Pecos. TDR puts out another offer, or a third party raises an offer at some point in the future, and TDR takes it. Remember, it's up to TDR to take any third party offer. They control the company. So there could be a bid and ask between what TDR was willing to buy in the remaining 35% and what they were willing to sell their 65% for. Maybe at this point, they only wanted to pay $950 to buy it in, and a third party was willing to pay 10 or 1050 to take it all. And 10 or 1050 wasn't enough for TDR. TVR doesn't own options in this like I do, right? Like they're not any kind of press time, right? For them, the smartest move is, waiting if you can't get a deal done at the price you want. They could buy back stock now. They could hopefully get a third contract, and they could sell this company for $15 a share if they can get the third contract. So one thing's for certain, they know a lot more than any of us do. You can look at it from a negative perspective, that they think the sky's falling, or you can look at it more neutral and not know what the reasons are for them to not, conclude a transaction. I'll tell you one thing. It's very unlikely it's caused the loss of the Dilley contract. Okay. They lost 45 million or 40 million of EBITDA on 210 million. That property can be repurposed at some point. And you just have to revalue the company based on the probabilities of each of those things happening. I think that took out, 100, 150 million of value. So $1 or $1.50. The 1080 was never the true price they were going to pay. They were going to pay more like 12 or more originally. So if you take out $1.50, the 12 turns into 1050. So either something really bad is going to happen in November with Pecos, which I think is very unlikely, or something else is at play here. And it's most likely some form of third-party bid that they didn't like the price of. And yeah, this is the path to do. The decision on the 2025 debt has to come soon. I would think we hear in the next 4 weeks. But they could just call it. They have enough cash to just call it. And they have a $175 million credit facility that's undrawn. So there's no issue with the debt. It's a pretty shitty business. There's probably not that many private equity firms that want to own this. Not just because of the nature of the renewals, but, outside of the oil and gas stuff, the migrant housing thing is controversial. And who wants that on their balance sheet if you're a private equity firm? So your list of buyers is low. Sorry for the basic question, but on Pecos, there are 6 separate locations. It's just the children's centers up for renewal? No, it's all of it. That's all one contract. The entire thing. All the government business that's left at the company is up for annual renewal in November. For what it's worth, if you figure 50 million EBITDA ex Pecos, but there's a decent chance they eventually get something for Dilley, plus it's de-risked, maybe that's a 5 to 6 stock, who knows? It would be a 5 to 6 stock after the fact, after something good happens. But I could definitely see it go to 3 to 4. What multiple can you put on Pecos if it's an annual renewal? 3 times EBITDA? Yeah, that's a good question. Yeah. But you could have asked that question though before this bid failed. It's almost like an annuity without knowing whether it's going to be the full annuity or not. But there's also a value for the pipeline. They created massive value with these contracts. So if they get a third contract, the NPV of it is huge because they get paid all this money up front to build it, right? The special committee was not established March 24th. It was established April 24th, I think. I don't think there's any significance of the 6 month and a day. But yeah, the $1 million question here has always been, what's this business worth? Given the variability of and the volatility of the contracts, right? I had a feeling that, this is what I thought could happen. It might still happen in the future. So if you take this business and you put it in a larger public company, like WillScot or McGrath, they can handle the volatility of the contracts much better because it's such a small part of their overall business. So if they bought this out at 6 times EBITDA and they're trading at 8 to 10 times EBITDA, they create massive value because it's diversified amongst their larger business. And this does fit in with WillScot. Am I saying that WillScot right? I know McGrath. I'm so tired. Yeah, WillScot. And TDR Capital used to own 20% of WillScot just a few years ago, and they sold it out in the open market. So TDR Capital and WillScot just had its merger broken up with McGrath because of antitrust. So WillScot is a natural buyer for this, and they now have the financial capability to do it. Is it exactly what WillScot does? Of course not, but it definitely rhymes, right? They don't do hospitality services, but all the renting of the facilities and the modular housing is right up the alley of what WillScot does. Would they want the attention of the migrant stuff? I have no idea. Do you even assign a big election catalyst to the stock? I thought both candidates housed the migrants. I never really understood the election angle here. Some people say Trump's better for it. I would think it's probably better for the Democrats to be in office. I don't know what this will do on election day. Their facilities are needed no matter who's in office, especially PECOS, because it's congressionally mandated to house the minors, unaccompanied minors. But yeah, I don't know what the election risk is here. I do not think that that's what they're waiting for is election day. If anything, they're waiting for the PECOS contract to be renewed and then to see what happens with the third government bid. You know, they put inorganic back in the press release, which makes it sound like they're going to buy something. They used to have inorganic all the time. Brad at WSC would never buy this, no VAPS opportunity, and also they are struggling with lower quality storage biz. I have a doubt they buy something that could disappear in 3 years. Yeah, maybe URI, but I put the probability less than 20%. I mean, clearly they asked all those people in this process and they all said no, though WSC couldn't have bought it the last 6 months because they were in the middle of the merger with McGrath. But URI would have been invited to the process and passed, right? So I'm just thinking out loud from in the future. You know, who could possibly be a buyer of this and create value? All right. What are the replacement costs for these assets? So that's a great question. So they're pretty high. If you go look on the balance sheet, I'll tell you right now, I did this the other day. You know, it's not a perfect process because you have depreciation that's not real depreciation. They're doing it for tax purposes. But you put up the balance sheet and you just look at their PP&E that's been depreciated. I'll pull it up for you now. Hold on. Sorry, it's taking me time to find it. Here it is. They have 350 million on the balance sheet for specialty rental assets. So $3.50 a share in book value of their specialty assets. It doesn't include a bunch of other crap on their balance sheet. Like they have another 35 million of other property, plant, and equipment. I won't value that, but 350. And then if you do depreciation over the last 3 years, there was 68, 52, and 53 in depreciation. So they depreciated 170 million in depreciation just in the last 3 years. If you add that back, you get to over $5 a share in book value for the assets. And if we remove CapEx, the maintenance CapEx at least. See, it's kind of hard because I don't know what let's see. The maintenance CapEx was 14, 12, and 11 for the last 3 years. So maintenance CapEx is low. Yet the depreciation is, humongous. So clearly the assets are worth more than 350 million from a replacement standpoint. Is it 500 million? Is it more than that? I have no idea. But you have a lot of margin of safety there, given the fact that it's also generating all this cash flow while you wait to see what happens with the contracts. It's a good question. Restores our full flexibility to pursue multiple capital allocation opportunities focused on maximizing value. What could they not do earlier? It's a great question. The only thing they could not have done earlier is buy back stock. Anything else could have been done in the last 6 months. They could have done M&A. They could have obviously bid for new contracts. It's a bizarre statement. Restores our full flexibility. It was just buybacks that they couldn't do. This break makes me a little nervous for JWN too. The more time goes by, not sure I could take the pain if that breaks too. Yeah, all I'll say with JWN is, that could take 2 more months still. It's very weird how these things work once they put the bid price out. I'm positioned very differently in JWN. I virtually own no common. It's all call spreads and 1x2 call spreads. My pain there is much less than my pain was today. If that whole position zeros, I'll lose half as much money as I lost today. So, but that's the only thing I have left, really. That and BridgeBio, which has been a disaster too. It's been a very bad month, people. So replacement cost plus net cash equals, there's no net cash today. There's no net cash today. But if you look at a year out from now, if you assume replacement cost is 500 million and they generate 100 million in free cash flow over the next 12 months, you get to $6 a share. Bear case is that they had these sweetheart contracts and were over-earning massively. Dilly went away, but new repurposed likely far lower than deal economics. Pico might be renewed at a lower econ too. Okay, so I can refute both of those things. So Pico was just renewed last year. They went through a whole process after owning it for years. It was government bid, and it's a 5-year contract with annual renewals. It's not a let's renegotiate annually, right? So, could the government come back 1 year later and say they want to take less money out? Yeah, I guess they could. I don't think that's how these things work. I think it's either you just cancel the contract or you don't. They're not the mafia. So that's the situation with Pico. I don't think that you're going to have a lower contract there. The Dilly is more interesting, okay? They probably were over-earning with Dilly. But guess what? There were 2 different parties over-earning. They were making the 45 million of EBITDA, and the prison operator was making 40 or 45 million of EBITDA. So it was making 90 million a year, that property. If it gets repurposed and their new partner is a nonprofit partner, which is similar to what they do with Pico's, they don't have to make 90 million anymore. They can go back to making 40 million and they get made the same exact way they were before. So there's a huge gap between what they can resell, repurpose Pico's at. And don't get me wrong, the prison operator had lots of costs too. So you can do this for 40 million less, right? Make it nonprofit, and the 40 million still goes to Target to rent the property. In my analysis, I was thinking maybe they only get 20 million going forward. So you lose 20 of the 40, at a 6 multiple. 6 times 20 is 120, and you lose $1.20 a share in value. Again, is it the end of the world? No. The obviously bigger issue here is how long are these contracts going to last for? And how does anybody put a perpetuity value on them? And I struggle to understand that answer. They're just not good businesses, and they might only be worth 4 or 5 times EBITDA. But again, if they get the third government contract, 4 times EBITDA is $12 a share. And you could do massive things with the balance sheet at that point. You'll be generating huge amounts of cash flow. These assets at the end of the day are basically basic rooms, dining halls, right? If government doesn't want them or want them, my guess is the private sector will pay a fraction of what the government would. Yes and no. I mean, they're currently utilizing a lot of these assets for the private sector, right? Oil and gas is whatever, a third of the business right now, or 30% of the business or something. So, and they're working on other contracts outside of government. They just haven't signed any of them, rare earth or whatever. The economics are lower than PECOS for the oil and gas. Yes, there's no question about it. I don't know if it's the same kind of contract though. I don't know what the details are, but they are. Yes. So yeah. So what exercise do you use there? Do you say that if they lose PECOS, does the new company end up with 100 million of EBITDA after they repurpose everything? They repurpose Dilley, they repurpose PECOS, and they get out 100 million of EBITDA, but the 100 million of EBITDA is higher quality. That's easily renewable. Is that worth 6 or 7 times EBITDA? That gets you to $6 or $7 a share where we're trading at today. So there's no upside, but it keeps your price here, right? And of course, if that happens, it's super messy. It doesn't just happen overnight, right? It breaks, stock goes down a lot, they repurpose it, the stock goes back up. But yeah, these are all the relevant questions. One thing's for certain is this stock has destroyed funds 2 years in a row, right? People were very disappointed with the PECOS renewal last year. The stock went from 16 to the 8s. They then launched this 1080 offer, and they conclude a process with no transaction. Even worse than concluding with no transaction, they don't even say that there were offers at 1080 or above to show the value there from the third parties or TDR that had access to the data room, right? So you're left wondering what it's worth. And you think it's certainly not worth 1080. So you're left with more questions than answers. We'll know a little more after the 13D comes out. We'll know a lot more in November when they have earnings, and if PECOS gets renewed. And then they're going to tell us about the third government contract. And then what they're going to do with this balance sheet, right? I'll reiterate, they can borrow $165 million and take out virtually every single share that's not owned by TDR at $7.50. So they have the financial flexibility to do a lot, but do they want to do it? They might not want to do that because they don't think it's worth this. They might not be allowed to do this because they're sitting on material information. Easier just own SPY and go to the beach. Yeah, I wish you would have told me that yesterday. But yes, I am definitely going to be taking some time off from special sits and YouTube. I was going to do that anyway if this worked, but this has just gutted me. And I think I'm probably down like 10 or 15% on the year now, which is miraculous that I'm only down 10 or 15%. And and take some time to digest it all, and yeah, regroup and come back strong next year. But for now, you're not going to see much from me. You're definitely not going to see very many special situations, if any. I'll only probably do a YouTube if there's something important to talk about with TDR, and Target. I mean, if anything happens with BridgeBio, obviously, if something important happens with JCPenney, with Nordstrom, Jesus, I keep calling it JCPenney. Off topic, if you're willing, wow, Bloomberg story, September 10th about FTI Consulting helping the company with a cash boost. The price reaction didn't really follow through. What could that report be about? The wow situation is really, really weird. Honestly, I own wow. You don't really want to hear a company looking to be refinancing debt or add new capacity of debt while they're in the ninth inning of a strategic process. It's also possible that anybody that buys them, they're rolling the debt anyway, so they need new debt for the expansion. So they could be doing two things in parallel, right? Trying to get more capacity for the builds, and then also run the process. They said in August in the conference call that they were going to pursue expanding their debt capabilities. So it's nothing surprising that they're now going ahead and doing that, but it makes you wonder what that means about the process and if the process is on life support. I bought a little more WoW in the high fours when that happened, but I don't have any strong conviction there. My boy Compound and Andrew Walker are much more versed in the WoW story. It's just a different situation. It's very levered. It's very cheap. Every dollar of equity there is a small move in EV/EBITDA. Just different. If you want to buy back stock, you limit the disclosures. Well, you limit the good disclosures, right? You're more than happy to say that the 1080 went away. You're more than happy to say that there was no formal third-party bids. You want to get the stock as low as possible to buy back the stock, not as high as possible. Yes, limit the good disclosures. That's what I mean, And again, TDR is already pregnant here. They have to do something with this position. They're not going to own 65% of this 3 years from now. So, what's their exit? What's their path to exit? Your guess is as good as mine. Maybe they don't even know yet. Compound says, I guess the WoW refi news has to do with the parallel path around financing expansion. Yeah, which is what I was just saying. If you consider a JV structure like TMO is doing, you need to get secured creditors to approve a restructuring of the term loan. Yeah, I just don't know. I think that is likely what it is. That allows you to carve out the fiber assets into a new entity. I don't think it speaks positively of a deal being imminent. I'll put you that way. It could be neutral, it could be negative of a transaction happening. But I don't think it means that we're going to wake up to a transaction soon. There. Really good discussion here, guys. I really appreciate actually everybody's feedback, even the ones I don't agree with. So I'm talking to you if you're still there. Keenson, what is it? That was your name? Keynes. Thank you. I'd much rather hear critical feedback than an echo chamber. No, I'm not talking about you, Keynesian short, unless you changed your name. Did you change your name? Before you were Keynes. Is that you? You just added Keynesian short? Oh, that's really, really funny. I thought it was two different people. No, I didn't think you were being a dick. I just, Any thoughts on EDR? Is it trading over deal price? Why is it? So I could talk about EDR until I'm blue in the face. So I have a very controversial take on what's happening with EDR. EDR is obviously trading up because people are buying it for appraisal rights. And the appraisal rights, you have to buy it. Once the deal goes definitive, you have to buy it within 20 business days of it going definitive. And there's just so many shares outstanding for the people that want to appraise. I believe that Silver Lake is royally screwed with EDR. I don't think they want to deal with the appraisal rights problem. And I don't think they want to deal with the post-close lawsuit problem. So these are two different things, okay? If you appraise, then a judge is going to decide what the value of your position is, okay? If you just hold it to close, you participate in a post-close fiduciary lawsuit that doesn't cost you anything and will likely be settled years from now for a lot of money. What is a post-close lawsuit? So they're going to be sued. That says that the company, Silver Lake, and the special committee, one, never shopped the company to anybody else but Silver Lake. And then two, did not allow for a majority of minority vote on this deal. It's Delaware precedent that you can't do that. It's just black and white. So they will lose a lawsuit if it goes to trial. The only question is how much money would they lose it for? But the real liability is the appraisal, because if they have a large percentage of people appraise and a judge decides that this is worth $35 or $40 a share, Silver Lake is going to be out billions and billions of dollars. But they can't get out of the deal. The deal is ironclad, and they've already voted for it by written consent. So what are their two options? Okay. One is they just go through with it. They close the deal. They lose billions and billions of dollars with appraisals and the post-close lawsuit. Two, they bump. Okay. They don't bump a lot. They bump 50 cents, $1, $1.50. Why wouldn't they bump a lot? They won't bump a lot because it doesn't help them in really any way. If they bump this $2 and they change it to a majority of minority vote, okay, and it goes through, it really helps with the post-close lawsuit, though they still didn't shop the company. So they're still going to be on the hook for a post-close lawsuit, but it's going to be much better to fight it this way. They might lose some of the appraisals because they're offering $2 more, but they're likely going to still have a ton of appraisals. So all they did was pay $2 more for all 300 million shares they don't own, costing them 600 million more, minus whatever the appraisals are going to be. What I think the possible outcome here will be, and it's crazy, I'm the only one saying this, so if it happens, it's not something that people are talking about. The special committee goes to Silver Lake and they say, based on where it's trading, based on the risk of lawsuits, why don't we bump it? We'll bump it a little bit, 50 cents or $1. We'll change it to majority of minority vote, and the vote's going to fail. And when the vote fails, the deal breaks. And that's it. There's no fee owed by Silver Lake for termination. And they just go forward with the company as is. And they spin off TKO in a year from now, just like they would have done anyway. And they create the value for their own LPs that way. To me, that's the cleanest way for them to get out of this. They had no idea when they bought this that TKO would go from 80 to 120. It's the appraisal and the way appraisal works that has them in big trouble. So I don't know what happens. I do know why it keeps going up. I own it in options. I own November 26 and 27 calls, and I own January 25 calls. I've sold some as it's gone up. I'm currently not going to appraise. My goal was to hold for the post-close lawsuit, but the more higher it goes, the more it makes me want to just sell and move on. Also, there's one final wrinkle here. If they do go forward with this and the definitive documents come out and we get to 20 days after the definitive documents come out and the window closes for when you can buy to appraise, it's extraordinarily likely that EDR is going to go down a lot. Because a lot of this, or most of this, is all people wanting to appraise. So once you go X appraisal, it's going to trade closer to the $27.50 of the deal price. Now, it might trade over still because people like me want to own for the post-close lawsuit. But how much over? I have no idea. So it's risky holding it now, right? It's risky holding it if you're not going to appraise because you might lose all this money once it goes X appraisal, if that makes any sense. It's a very weird situation. I don't look at Europe. I lose enough money in America. Yeah, I stopped doing European stocks a long time ago because it fucks with my sleep. More so than this fucks with my sleep. All right, group. All right, team. Very, very depressing. I'm sorry for anybody that lost money. I'm certainly not that optimistic that in the near term we make it back. But I'm more optimistic that something good could happen in the next 3 months with the contracts that can make the stock go a lot higher. So we'll just have to wait and see. The SEC form number that would trigger the 20-day period, I'll tell you right now. It is on August 5th, they filed two forms, the PREM 14C and the SC 15E3. The PREM 14C is like what you see in any merger agreement, where it gives you the background, fairness, opinion, all that stuff, okay? The SC 15E3 is when you are a majority or minority holder taking out a company. What matters here is the PREM 14C. That's going to become DEF 14C when it's definitive. Okay? Until that's DEF 14C, it's not definitive. Does that make sense? So you'll know. You'll know when it comes out because I think EDR will go up more as people, as people start piling in. Oh, my friend makes a good point. They're almost certainly in a quiet period right now, Target Hospitality. Unless they had a 10B plan in place, they can't buy back stock now anyway until they report earnings. And it might have been unlikely that they had a 10B in place, though they did reaffirm guidance. So I don't know what that does, if that allows them to buy back stock. One more question. What is the likelihood company special committee TDR has good insight into third contract? If special committee thinks 90%, very hard to accept any bid. Yes, that's true, but that wouldn't explain why TDR wouldn't have reaffirmed the 1080 bid. It's hard to believe that the company is sitting on this great news and then TDR still wouldn't reaffirm that bid. That's the part that is troubling. Any thoughts on the recent BBI decline? It's gut-wrenching. It's awful. I do not believe anything has changed with BBIO. I continue to believe that they're going to have one of the best biotech launches versus expectations in history. I think that they can exit 2025 at least $1 billion in sales. even with the market saying that they'll only do 250 million of sales in 2025. And I think the 1 billion is conservative. So we'll see if I'm right or not. But I think that stock's going to have a monster year next year. The decline's pretty obvious, right? KKR sold, they're insiders. Why are they selling? I was told that they're selling because the stock they sold in was like a pre-money valuation of like under $100 million for the company. It's from an old fund. I don't know. You don't like to see anyone on the board sell stock. Luckily, Neil hasn't sold any. Maybe TDR didn't want to end up like Silver Lake, and I will see you in Vegas. Oh, man. I don't know. I really don't know. I had a very hard time seeing how this could end without a transaction. I would have thought Silver Lake would have sold to any third party. Sorry, TDR would have sold to any third party if they didn't want to buy it. But all you can reasonably assume is that no third party wanted to own it. But if no third party wanted to own it, why did they add other proposals and strategic alternatives to the August press release? Why put that in there? They're trying to smoke out new people that many months into the process? I just don't buy it. I think they did have a third party, and the third party and TDR and the special committee all couldn't agree on what the thing was worth. We'll never know if that's 8, 9, 10, 11, whatever. But we'll know more soon. All right. I can't believe I did this for an hour. Thank you all very much. I appreciate the camaraderie. Again, I'm sorry about the terrible outcome here. And there'll always be a new way to lose money tomorrow. All right. Take care, guys.